start of the new year inevitably come new taxes, and the Zimbabwe Revenue Authority recently released the PAYE tax tables for 2022. So what exactly is PAYE, or pay as you earn? So the simple answer is PAYE is a way that your employer uses to calculate how much income tax it's going to pay on your behalf to ZIMRE. All of this is specified in the Income Tax Act, which kind of parts out which parts of your salary are going to be paid out to ZIMRE and how it's going to do that. An example of the impact of the Income Tax Act are the amendments we saw last year from the Ministry of Finance. So for 2022, if you earn part of your salary in United States dollars or USD, all of it will be regarded as USD and taxed at the USD rate. So PAYE works on two very simple principles: gross earnings and net earnings. According to the Zimbabwe Revenue Authority, assume for a moment that everything you earn, be it in cash, benefits, or an item of value given instead of cash, is subject to some sort of tax. So what ZIMRA is saying is that your gross earnings comprise of your salary, what you're paid by the company for the job you do, and all the benefits you get. So your company might be paying for your accommodation, might be paying for your mobile data, internet, voice, lunch. All of those things have to be boiled down into monetary terms, and then that makes up your gross earnings. So since we've gotten gross earnings out of the way, your net earnings are actually what are calculated by the PAYE tax table. So to put that into some sort of perspective, let's take the example of an employee who earns $200,000 a month. Since our hypothetical employee earns $200,000 per month, RTGS, we'll use the 2022 PAYE tax table and skip to the monthly table. This individual falls between the 120,001 to 240,000 range. To get their net earnings, we'll need to multiply their gross earnings 200,000 by 30%. From that result, subtract 14,000. So for our fictional employee, the income tax per month is 46,000. The net earnings for this employee can be found by subtracting 46,000 from 200,000, which gives us a result of 154,000 a month. So that's basically how you calculate your pay-as-you-earn income tax for the month. The 3% AIDS levy is subject to tax credits and incentives, which we'll cover in the next video.